Hey everybody, it's Chuck Barone. Monday, October the 30th, 2023. It's good to be back, man. Had a nice weekend down in Arizona, and this week I'll be here the whole week though, yay. No travels. I think I'm pretty much done traveling for this year now, so get sick of me. Anyway, it's good to have everybody here. As always, let me welcome everybody to the show, and as always, thank you guys for your support. We appreciate you guys watching these videos. All right, so let's talk about markets today. Markets. Wow, what a nice day for the stock market. A nice bounce. I think the market feeling like there was a little bit of maybe overselling last week. So the markets come roaring back today, man. Wow, it's a nice day for the stock market. The Dow Jones up 511 points. 32,928 on the Dow. The NASDAQ up 146 points, 12,789 on the NASDAQ, and the S&P, the broad market, up 49 points, sitting at 4,166. Just a solid day across the board for stocks. Now, don't get me wrong. I mean, if they didn't have a couple of really bad days in a row last week, this would be something to write home about. This is basically taking back some of those losses. Nothing more than that. But nonetheless, it's nice to see the market have a decent up day for a change. The bond market today selling a little bit off again. Now kind of getting to the decision time, right? So the 10-year up. Now remember, when bonds sell off, the price goes down, the yield, the rate goes higher, right? So the 10-year today up 3 basis points, sitting at 4.87%, creeping closer and closer to 5. The 2-year sitting at 5.05%, so already over 5% there. That's up 4 basis points today. 18 basis point inversion, so that's really shrunk down. I'm probably going to get a flat yield curve coming anytime soon, and then we'll see where it goes from there. But anyway, the bond market, this is the worst bear market, from what I've been reading, the worst bear market in bonds maybe ever. Now, part of that has to do with the Fed raising rates, of course. So every existing low coupon bond that existed for years and years and years while the Fed kept rates so low, absolutely getting annihilated with these rate increases, right? So there's the bulk of the big losses. The issues for the last couple of years, however, have been higher, but guess what? That's what's really causing not only is the losses in the bond market causing big pain to institutional investors, banks, and everybody that holds treasuries getting killed. But now you follow it up, the stock's down, right? And there just hasn't been much room to maneuver for Wall Street to really make some real money. You got deals tanking, not as many, their M&A businesses down. Trading, not as good as it has been for them. So tough times on Wall Street right now. We'll be hearing weeping at the end of the year when they only get, $100, $200, $500 million worth of bonuses or whatever. The dollar today down almost a half a point down, sitting at 106.14 on the index. Still a very strong number for the dollar, even though they're down there. You're above 106, the dollar's doing just fine. Metals today, gold and silver mixed today. Gold falling $10, sitting at $1,995.60. A nice number for gold, right at that $2,000 level. Silver actually gains today, up 18 cents, sitting at $23.27 for an ounce of silver. I think there's a little more play in silver as it catches up. Last time we had gold at 2,000, we had silver at 25. I would not be surprised to see that happen again. Oil today down, coming back down to earth, down $2. 98 cents per barrel, $82.56 for a barrel of West Texas Intermediate. Still too high, but coming back down to earth. For sure, if we didn't have all this tumult in the Middle East, oil prices would be in the low 70s, probably even into the 60s. Bitcoin today down small, down $148. As they digest this giant rally, Bitcoin now sitting 34,424, very strong number. All right, so like we do every Monday, let's talk about what's coming up this week. It's going to be a humongous week, maybe even bigger than last week as far as the data we're going to get. Now today, nothing real, just earnings coming. And earnings, this is a huge week for earnings, guys, because a lot of the biggest 150 companies in the S&P 500 will be recording this week. Some of the biggest companies, McDonald's, Caterpillar, Pfizer, PayPal, Apple, ConocoPhillips, Eli Lilly, Starbucks, and the list is a long one. Companies that will be reporting earnings give us an idea. This is a broad spectrum of the economy, how companies are doing with their earnings. So that's going to be interesting. We'll be watching for that. Tomorrow starts the Fed meeting. They're going to meet tomorrow and announce their fund on Wednesday. So the market's going to be a little uncertain tomorrow. We'll see if any hints come out about where the Fed is at. The market's certainly believing the Fed will do nothing. So that starts tomorrow. Along with that, we'll get the Chicago PMI, the Purchasing Managers Index, which is expected to be higher. We'll get consumer confidence data, which is expected to be lower. And we'll get the Employment Cost Index, which is expected to be up 1% last month. Again, this number is too high for the Fed to be tolerating. Was 1% they're expecting 1% this month. It was 1% last month. We can't have employment costs rising at 12% a year. On Wednesday, the Fed meeting ends. We'll get Powell, his presser. He will hog the day for sure. We'll see if anything slips out of him that could move these markets. We'll also get construction spending, which is expected to be up. We'll get the ISM Manufacturing Index. That's expected to be unchanged. Good prediction, guys. And we'll also get the Mortgage Bankers Indexes, which are all expected to be down. Thursday, we'll already have the Fed's rate decision. Now we'll get jobless claims. Expected to be higher at 215,000 this week, up from 210 last week. We'll get productivity numbers. Can you believe productivity is expected to be up 4% this quarter? Wow, big numbers. So U.S. productivity, just more signs of hot economy. We'll get the unit labor cost, which is a different index than the employment cost index, and that is also expected to be up 1%. So, cost of hiring and maintaining employees costing. Also on Thursday, we'll get factory orders, which are expected to be higher as well. On Friday, we'll get the big jobs report, the non-farm payrolls, which they should just call their jobs report. How many jobs did we get created last month? It's expected to be 175,000, down from 336,000 the previous. I don't know if we can do that again 2 months in a row, but we'll also get the unemployment rate, which is expected to be unchanged at 3.8%. So it's going to be a huge week, and a lot of this data, any chinks in the armor here, because really the Fed is already going to be making their announcement before most of this data gets put out to the public. Hopefully they're getting an inside look at it, and they'll be able to make their policy decisions, good ones, with the data we're going to be getting, right? So this week, the whole focus of everything is going to be on Powell and the Fed. The march of the mediocrities, right? It's going to be a shit show. Now, the markets are telling us basically 0% chance that the Fed will raise rates this week. I got to ask why. Why would they not raise rates? All the numbers we're getting, every sign, all the major data that we've been seeing says the Fed's not done yet, man. Inflation numbers coming in hot. Jobs, hot. Wages, hot. Greedy corporations continuing to raise prices, right? And you still those inflation numbers are not coming down the way they were. We actually hit a bottom on top line CPI, 3%. Guess what? The last 2 months been 3.7. Not coming down, going the wrong way, right? So now you got inflation stuck at closer to 4% than 2%. This is the numbers. So if you're going to raise rates, what in the hell? Now, I think the Fed is reluctant to raise rates. I think they really believe that there's going to be a recession. But Powell has already kind of strongly hinted that there's still another hike coming this year. If that's the case, why wait, man? You want the markets to believe you're on top of things? Get in front of the markets. Don't react to them. So if it's me, okay, if I'm making this decision, it would be 100% certainty we get a quarter point hike this week. 100%. All of this data, and even what they're expecting on this data, says rates are not high enough yet. The spread between what the rate is and where the inflation number is, still not where it needs to be. So this is all pointing at the Fed, chicken shit coward wimps. What they want to do now, they want to wait for this recession that has been coming for the past 18 months and is refusing to do what the Fed wants. But they're waiting for the recession to do the Fed's job for it. Along with this bond market, which is saturated with treasuries, and the bond market doesn't really need much help from the Fed to raise rates. It's a simple supply and demand. They're oversupply right now. So it's all pointing at higher rates coming. If that's the case, why wait, man? Why fart around? Why do this? Just not making sense. Okay? But I was reading a little article today about this new Speaker of the House. And a lot of his policies in my mind are a little off, okay? But one thing he said caught my attention. They want to provide $14 billion in aid for Israel in its war. Okay, Israel's an ally. Good idea. Let's help them. However, the new speaker is proposing cuts to other spending to offset that $14 billion. Now, when you're talking about an overall $4 trillion budget, $14 billion is nothing in a budget that size. But you would think this guy asked them to sacrifice their firstborn child. They're acting like it would be the end of the world to offset spending with cuts somewhere else, like we have an unlimited amount of money we can spend and just borrow for eternity. So, I don't know how well he'll do as speaker. I really don't know much about his policies. Some of the stuff I saw is a little different than the way I would see it. But at least he's looking at the numbers. So bully for him there. Now, real estate, before I go. Okay, real estate. I was reading 60,000 purchase contracts to buy real estate canceled last month before the close. 60,000 purchase contracts. That's what the Fed is doing to the real estate market. People want to buy. And then right before they actually pull the trigger, they're looking at those payments and they're getting cold feet backing out. 60,000 contracts. The U.S. median price right now, $420,846. Well, stubbornly refusing to come down. Basically pricing young people out of the housing market. Right now, less than 10% of homeowners, are 35 or younger. So they're just, I can see why they're getting pissed. Anyway, that's it for the day, guys. We'll be back tomorrow. We start getting some data in tomorrow. It's going to be a big finish this week, Wednesday, Thursday, Friday. Tomorrow might be an interesting day. It'll be the quiet before the storm, but we'll get consumer confidence numbers, which I'm sure will be telling, plus the employment cost. If that one spikes up higher than 1%, all bets are off. But anyway, I babbled. End of the show. We appreciate your support. Back tomorrow. Love you. Till then, take care. Thanks.